Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of InkResearch.ca. He invented the Canadian Ink Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Data Fund Grade A Plus Award winner. His website, CanadianInsider.com. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Ted, is oil doing better than expected, especially in Canada?
It's doing a lot better than most people expected, and probably that a lot of people still realize. You know, this is a theme that we've been talking about here on the show, Jim, for the last few weeks. And in fact, it's not just oil and gas stocks in Canada that are doing well, but the Canadian mid-caps are doing well. You know, in the introduction, you graciously talk about the Canadian Insider Index, and basically it's been outperforming the S&P 500 since the middle of October, and it's up about 8% since the middle of October. That compares to the S&P 500, which is up about 6%, and you got a little bit of a currency lift as well. And why is October 15th the important date? Why pick that date? Well, that's when the Fed started its Treasury bill buying, the not QE asset purchases, and that was a game changer. And while the Canadian Insider Index, which is a mid-cap focused Canadian index, it looks like mid-cap stocks. Well, it's been on a bit of a tear here since the Fed started buying Treasury bills. You really want to see what's shooting lights out. You look at Canadian oil and gas stocks. I mean, the Canadian S&P TSX Capped Energy Index is up about 12%. In just a little over 2 months since October 15th. And Jim, we have to put this in the backdrop of all the gloom and doom that we heard about after the federal election, and that we continue to hear. And, it was just setting up a fantastic buying opportunity, which, we've talked about here for the last couple of weeks. So much negativity towards Canadian stocks. There was so much despondency after Trudeau won the election, and it just set a nice environment for a bounce. But it wouldn't have happened though, probably without the Fed's help. I mean, at the end of the day, it was the Fed that came in and started juicing the financial system. This time in a way that we believe will support commodities. Because it's focusing on the short end of the curve. What I mean by that is buying Treasury bills. It's not buying bonds. If we're buying bonds again, that would be a whole different story. We'd be back to we call the old boy playbook, the Bernanke, Obama, Yellen playbook, where you'd be looking at long dated assets such as real estate and bonds and corporate bonds, and you'd be rushing to beat the bank and scoop up all of those long dated assets that you can. It's a different ball game when they're buying Treasury bills. That beat the bank with bonds game is not on, and we're actually seeing bonds weaken here into the end of the year. So we've had a nice breakout in Canadian oil and gas stocks. As a matter of fact, I was looking at for example, Whitecap Resources, which has just sort of gone up like a rocket here in the last this month. It's a stock we've written about on CanadianInsider.com and on InkResearch.com to our subscribers, and it had a nice move. At some point, it's probably going to have to take a break. But when you look at some of the dividend yields on these stocks, they've really been priced in for an environment where oil's going down to $25, $35, $45, maybe zero, natural gas to stay at zero. I mean, it's really had a lot of gloom priced in. What's not priced in is, what if there's actually going to be a growing demand for crude over the next year with the trade deal done and with the Fed pumping liquidity into the system, and what happens if U.S. shale kind of sputters in terms of the growth here. That hasn't been priced in our opinion, and we base that off of what we're seeing insiders doing. They're still buying as opposed to selling in general, on both sides of the border. So, this energy move, we think, could potentially have a long way to go. Of course, there are caveats. Of course, things could go south, especially if the Fed does another pivot back to its, we're going to hike rates and stop supporting the financial system from liquidity. Well, if we get another Fed pivot, but I think they learned their lesson, and I don't think we're going to get a Fed pivot in an election year. I think we're going to get more of the same, and more of the same, I believe, means more of the same from what we've seen since October 15th. And, if you're still gloomy and doomy on the energy sector, I think, you just want to look and see what the Fed's doing, put the politics and the headlines we've had over the past 2 years aside. Those were all relevant, but, relevant to what happened. But what's happening now, Trans Mountain's being built, Fed's pumping the system full of liquidity, and we have some sort of a trade deal which will at least provide some degree of certainty on the trade front going forward, and I say that in a relative sense. So things are looking up for oil. There'll probably be a pullback here at some point, of course. Nothing keeps roaring forever up, nothing keeps going up in a straight arrow. But let's just see what happens here with the Fed, and right now things are looking much better than they have been for Canadian oil gas stocks in a long, long time.
Did Encana bail out of Calgary and go to Denver prematurely?
Well, I'm not sure that that's been approved, but I took that as one of the signs that we were near the bottom in all this, and because the rationale, some of the rationale behind their move was so pathetic, that it wants to go chase index funds in the U.S. And yes, the market structure has changed where there's a lot of money coming in index funds, particularly in the United States. But you know what? That's all going to unravel at some point. It may not be for a few years, okay? But by the time, you're going to move a head office of a large company like that, it should be sort of a permanent move. Well, what are they going to do? Once the index funds game ends, which will be based primarily, I think, on demographics trends. So that'll be it'll be a slow moving super tanker that turns around. But once it gets going in the other direction, it isn't going to stop either. So what is Canada going to do? Move back to Canada? It's ridiculous what they're doing. But that the shareholders can vote on it. I believe they haven't voted yet. I could be wrong. I haven't really paid much attention to Canada since they made that move, just because. I have there's other stocks in the Canadian market that I take more seriously at this point than that outfit.
Chevron's pulling out of the Kitimat LNG project, but that doesn't mean the project's dead, because they said we're not, saying it's dead. What we're doing is selling our portion of it, so the plant should go ahead, shouldn't it?
I'm not familiar with the transactional details of that. However, these large integrated global producers, they make strategic decisions all the time, and I think you'd have to put that into context of what else you're doing in the world. So, in terms of natural gas and LNG, I think it could have a pretty good future. There is a lot of supply right now. There's no doubt about it, thanks in part to the shale boom. But look, Jim, we just had a very big development on the green economy front over the weekend, which not a lot of people are talking about, and that is the total failure of the Madrid climate change conference, but ended, with basically nothing, nothing being done. It was a big nothing burger that was served at the end, but you don't put that kind of a conference together to serve up nothing burgers. I mean, it was supposed to provide some momentum. And what the problem, I believe, is that you don't have a consensus amongst the global community on how to achieve the Paris targets. Basically you've got the green radical movement, the green parties of the world, saying no fossil fuels, no fossil fuels. But, you've got the reality of people living in developing nations and the like that don't have the luxury of not using fossil fuels. That they're just not that developed where they can just, switch over to, Tesla cars and, or Chevy Volts. They just don't have that infrastructure. And if you want to take away their scooters and their, and their cars, good luck. Good luck on that, getting those countries to be serious about climate change. So it's going to take a rethink. And the whole mantra of no more fossil fuels has to be put to bed. Fossil fuels are going to be part of meeting the Paris Agreement targets, because if they're not part of the agreement, then it won't be reached, because there's no way that every country in the world is going to be giving up fossil fuels. It's just not going to happen. And, you and I, or you and many of your, many Canadian listeners to this show get that, but there are many who don't, and many who still believe that we're all going to be driving around the world in electric cars and electric scooters and electric boats and one day maybe, but we're talking multiple generations from now. And last time I heard, there was a climate emergency, and that's going to require some emergency thinking about all these environmental radicals out there, including the Green Party in British Columbia and the Green Parties in Canada, who, are very hostile to the oil patch. Well, I have news for them. The oil patch has to be part of the solution. And, there's an idea for the many candidates thinking about running for the Conservatives, instead of kind of shuffling away from the climate change debate and kind of treating it as an adjunct issue, seize the moment here and put a bold vision to meet our Paris Agreement targets, by working with the oil patch, which, and we have a lot of good technology in the Canadian oil patch. We have a lot of companies who are working on it. And, it's something that, we can't just sort of sit by and ignore. And if the Conservatives ignore climate change, they're ignoring all these companies and all these smart people in the oil patch that are working very hard on trying to reduce emissions and moving us to sort of a net zero fossil fuel industry, a net zero carbon. And that's the vision, right? But there's got to be some sponsors of that vision on the political front. And the only political party that I know right now that could possibly do that is the Conservatives. But so far they haven't wanted to do that because they're afraid of a radical group in their own party that doesn't, for whatever reason, doesn't want to touch the climate change issue. They think it's like the third rail. Well, there's a way to look at climate change. It can be a political winner, but also a big economic winner for Canada. And we've got to start calling out these green radicals who basically, through their policies, are favoring countries like Saudi Arabia, who are really falling behind, by the way, on their climate commitments. Like Saudi Arabia and Russia, who, with the Green Party and their friends, who they're basically supporting by trying to shut down the Canadian fossil fuel industry, they're the ones who are missing their targets by a country mile. So we really need to rethink on climate strategy globally, and we also need some fossil fuel based solutions champions to emerge in Canada, on the political front. So let's hope for 2020 we get one or two people in the Conservative Party race who can be articulate on that topic and start explaining to Canadians how the oil patch is part of the solution, not the problem.
We'll have more with Ted Dixon right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Ted Dixon. Ted, gold and silver, are they still bright and shiny?
Yeah, that's a good question right now, because we're sort of in a holding pattern, I think, for the gold group after a nice run. And what we're looking at and keeping a close eye on is the silver gold ratio. That's the price of silver divided by the price of gold. So when it's going up, it means silver's getting more expensive compared to gold. The price of silver is going up faster than the price of gold. And it's been holding steady here for the past few weeks, and our theme is basically that, a big theme going into the new year is that we expect there's a good chance for inflation expectations to move up in the world, and in North America in particular. Well, we already see inflation moving up here in Canada. So we are looking for a move up in the silver gold ratio, and that will really set the tone, I think, for 2020 in terms of what to look for in the precious metal space in terms of investment opportunities. I think there's a big difference between looking at mining investment candidates if you expect a deflationary environment and if you expect an inflationary environment. Gold would do better than silver in a deflation. And so, you sort of those high-grade gold plays would be more favorable in a deflationary environment. But if you've got inflation picking up, then, I think you're looking at which mines, which companies are better positioned to, profitably, produce those metals, which are going up in price, which may be outperforming gold as well. So, I think we're in a holding pattern right now, and I think it makes sense. We believe that inflation's going to move up, but Jim, I've thought that breakout's going to happen before, and it hasn't. And so, it's not a sure thing by any stretch of the imagination. We just happen to see stronger signals this time from our insiders that that's likely going to happen, but it's not a slam dunk. And, we've seen how miserable central banks have been at generating inflation. They've been trying to. They can only seem to generate asset price inflation. But look, the Federal Reserve in the United States is taking a different approach this time. I think they've thought about it. I don't think the fact that they're buying Treasury bills instead of Treasury bonds is an accident. I expect that's going to help with boosting up inflation expectations in the new year. So let's keep an eye on that gold-silver ratio. I think then we'll also see maybe a set of winners, relative winners emerge out of the gold mining space. Just maybe a little too early for that move to happen right now.
We'll have more with Ted Dixon right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, do you expect marijuana stocks to bounce back a bit after a disastrous year? for many.
Well, a couple of weeks ago, my inbox and Twitter message feed was full of questions about, is now the time to buy marijuana stocks, and I didn't really have much of a conviction at that point. However, as we put a video out on our YouTube channel, and you can also watch on CanadianInsider.com on Ultra Money Free on any company page. You just have to wait for it to come up. You scroll through, wait for the loop to get to our December 17th morning report summary on Aurora Cannabis. And while we're not very upbeat on Aurora Cannabis by any stretch of the imagination, the indicators that we look at for the marijuana group have turned positive, which we believe, reinforce this low we saw in the ETF, the Horizons Marijuana Medical Life Sciences Index ETF, that had a 52-week low, I believe, in late November. Now it's it's weakened off a little bit here again. However, once the tax law selling is over, our indicators suggest, there may be room for a bit of a short-term bounce here in the marijuana space. Nothing's guaranteed. I could easily think of a scenario where that could happen, where you maybe have a bit of a pullback in some of these cyclical plays like energy that have done really well in the past few weeks, and somebody moves back into the beaten up marijuana space. We just wouldn't be all that thrilled with the Canadian growers. We don't see a lot of the Canadian big growers on our screens are not ranking, or they're ranking very poorly. When you can watch that video about Aurora Cannabis to get a sense. But the space has been really hammered here, and our indicators, if they're right, and they're not always right, it suggests that they're prone for a bit of a bounce. But look, I wouldn't get overly excited about what's coming here. It just looks to us, based on our signals, that maybe things have got enough gloom priced in, enough forced selling, that maybe we're going to get a bounce here into the new year, after this tax law selling is done. Well, we'll have to see. It's not something I have a big conviction on, but, looking at our indicators, which are, all quantitative, that doesn't involve us making any adjustments to, just looking at, what's happened to the indicator, it's giving us an indication that we're at some sort of a support level here right now for the broad group. But again, I wouldn't get too excited about the big Canadian growers.
SNC Lavalin, the scandal that just about broke the back of the Trudeau government. Now they have a settlement. They pled guilty to one count of fraud or bribery, fined $280 million, 3 years of probation. It looks like it's just going to go quietly away.
Well, I think, Jim, that's the point. The goal of everyone involved to have it go quietly away, and I'm sure everyone involved with that case directly hopes that by 2020 SNC Lavalin will have been put to bed and will be yet last year's news. So, it's probably a deal that everyone involved with is happy with. Whether it's the right deal for Canada, I haven't looked at the terms of it, so I'll reserve judgment on it. But I'm sure there are a number of relieved players around the political table and the boardroom tables on that one. But and certainly it takes a potential issue away, in the next federal election. However, I don't think that's necessarily a slam dunk, but it certainly helps the company move on, and a number of players move on from that story. So it's interesting development, and but again, I think it'll be a history in the history books as we start talking about 2020.
And of course, do the deal close to Christmas when people aren't watching the news.
Well, funny how that works sometimes. I wonder what else we're going to see in the news over the next week or so, Jim. That December 20th, that's coming up on this Friday afternoon. Boy, if you've got some laundry to hang out, that wouldn't be a bad day to do it, would it? In terms of trying to slip under the radar screen. We'll have to see. We'll have to be watching our newswire feeds Friday afternoon to see what little gems pop up.
Ted, thank you so much for chatting with us.
Jim, thank you very much for a great year with you on HowStreet.com, and just want to make sure your listeners are aware that by Boxing Day, our offer for $99 off our Inc. Canadian Insider Club Ultra Money subscription will be over. So next 7 days, why don't you go to CanadianInsider.com if you're so inclined to sign up and take advantage of our $99 discount, which will end a Boxing Day week. So just want to bring that to your listeners' attention. But more importantly, want to wish them all a very Merry Christmas.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.